The outperformance in the investment bank is the main reason for the profit in the quarter, and we're really pleased with the performance. You know, as you've seen, the investment bank X items is up over 50%. Strong performance in our trading businesses, strong performance in our corporate finance businesses, and you've seen us perform, you know, and participate, if you like, in the strong market conditions of the second quarter. Now that's essentially financed the higher level of provisions that we've taken in the quarter, in line with the guidance that we gave of 760, nearly 800 million in the quarter. While we've also, I think, made considerable progress on our transformation and absorbed restructuring and other charges in the quarter. So as you put all those things together, it still produced a profit, and we're very pleased with that outcome.
Analysts do look at fixed sales and trading, and if you compare, I mean, you are up there by 39%, I think, but it's not as good as the 5 US big banks. So why is that, and would you say that you're losing market share?
So we're up in our FIC business by 46% X items, which we disclose are not unusual to the recent quarters. And we think that performance is strong, and in many of the businesses in line with our competitors. You have to remember that our business composition is quite different from some of our competitors. We don't participate, for example, in commodities. Our US rates footprint is deliberately smaller than some of our peers. And we also have a relatively larger financing business that is an accrual business. And so that changes what the relative performance looks like. But underneath that, we have trading businesses that have participated in line with some of our peers. Overall, rates, FX, emerging markets are up over 75% year on year. And our rates business is now been up over, well, around 100%, so doubled in each of the last 3 quarters. And so we are seeing that participation in a strong revenue environment that you've seen with some of our peers. And the other point I'd make is that for us, of course, we're now 12 months into our repositioning of the company, transition or transformation of the company. And so what's very encouraging for us is to see the franchise momentum, the client engagement, and capabilities that I think our clients are showing that they value in those businesses. So overall, very pleased.
Let's look to the future. Do you think that momentum can be maintained? Because obviously the second quarter was like the perfect quarter for investment banking, especially in that area where you're strong at.
Look, we do expect a normalization, as I think you've heard from some of our peers. The very elevated levels of volumes, volatilities, bid-offer spreads, and also financing activity in the marketplace, you know, is not going to continue in, I think, the second half of the year as it was, you know, since March. That said, I think that normalization will take some time. So we'd see market conditions continuing to be, if you like, better than perhaps was the case in the second half of last year. And again, for our business, the critical thing is that we're regaining that momentum, and we'd like to see then sort of market share gains continue into the second half.